Hi everyone, myself Prithvi. Today welcome you all for my YouTube channel. In this video, I would like to discuss on another one fundamental analysis of another one stocks which is in food processing space. The company is known as Varun Beverages. So recently in the last week, the Varun Beverages has announced a bonus share issue of 1:2. So for every existing 2 shares, you will be entitled to get 1 share for free of cost. So therefore, to entitle this bonus shares, the record date for the company has set is the June 12th. So the person who has been buying this share on June 9th, he has been eligible to get that bonus shares. So I think I have made it clear. So this is the latest announcement, the latest news or announcement came by Varun Beverages. Why I have taken Varun Beverages for my fundamental analysis is mainly because this is a growing segment. So the beverages will not going to deteriorate day by day. So year on year, as you can see, since from childhood, I am also seeing the cool drinks are growing. Cool drinks are increasing. The bakery products are increasing. The bakeries are increasing. So it is not a degrowing segment. So because of that, I am seems very much interesting about this company. And one of the person has commented in the comment section also about this Varun Beverages to make a video on fundamental analysis of this company. Because of that, I have taken this Varun Beverages for my fundamental analysis in today's session. So please watch this video till the end to get to know how does the stock price stands at a current valuation, and do like and subscribe to my channel to receive the further fundamental analysis and latest announcement about the stock market and financial analysis of all the stocks which I will be doing in the future. So firstly, I would like to talk about on the business of the company. So when you come to the business of the company, so Varun Beverages is in the space of beverage segment. So the company made a tie-up with the Pepsi company to market, distribute, bottling, all the things which has been taken care by the Varun Beverages with a trademark of Pepsi. It's a US based company. Almost since from 29 years, the Varun Beverages are doing business in India. So almost in India, they have occupied 27 and 7 union territories. So almost 85% plus revenue for the Pepsi company's sales in India, which has been contributed by the Varun Beverages itself. So which one is a very important thing. So Varun Beverages also operates in 6 countries. So firstly the India, nextly the Nepal and Sri Lanka. So these 3 countries alone contributes 81% of the revenue for the Varun Beverages company. Next, other 3 countries like in the Africa, one is Morocco, Zambia and Zimbabwe. These countries will contribute almost 19% revenue for the company. So one thing which I want to talk about this company is that the company has been doing a business with a strategic partnership with PepsiCo from 29 years. So it is a 29-year strategic partnership. All the bottling, producing of the Pepsi bottling and marketing, sales and distribution and advertisement, all will be taken care by the Varun Beverages itself. So one thing which I want to talk about in detail about this company is that the company financial results, the quarter on quarter results is not as sustainable. Why? Because this is not a sustainable business, this is a seasonal business. So when in the March, April, May, these are the quarters where in the summer season there is a huge demand for the cool drinks and beverages space. Because of that, the Varun Beverages sales is going to go up. June quarter sales is always be highest in the year. Next, after that, after the June quarter, next to September quarter, there is a moderate sales. Next, from the October to December quarter, it's a winter season and rainy season combined. It's a fully low volumes will be there, low revenues, low profit will be declared by the company. So next after from January to March, the sales will going to pick up. So this is how the sales and business of the company is going to go. So what you can analyze is that when you are analyzing the financial results of a quarter on quarter analysis, don't compare with the previous quarter of the current year. Compare with the previous quarter of last year so that you can able to understand how does the company is performing when you compare to the quarter on quarter of the year on year. So please don't come into the conclusion that if the June quarter, next the coming June quarter, you will be seeing a huge sales and a huge revenue for the company. But don't thinking that the sales is huge when you compare to the previous quarter and all. Don't jump into the company. Don't come into the conclusion. So please analyze the result properly and take a call on this company. So this is all about the business of the company. So next, let us look at the products which the company is manufacturing. So the company is manufacturing the carbonated soft drinks. In carbonated soft drinks, the one product is like Mountain Dew, 7-Up, Mirinda and Nimbus. So these are the products in the carbonated soft drinks. In the carbonated juice based drinks, you could able to find the product like Nimbus and Mountain Dew Ice. And they also have energy drink. In energy drink, you will be seeing an advertisement in the televisions and all. The product called Sting energy drink, which will be manufactured by Varun Beverages itself. Next is the club soda. Next is the fruity pulp, where you can see the Tropicana and Nimbus and all. Next, they also have sports based drink. So, and these are all the products which they have in this space. So next, they also have packaged water. One name is called the Aquafina and Aquavis. So next space is the dairy based products. In dairy based products, where you can find the mango shake. Next one is the cold coffee. So this, where you can, if you are buying this product when in the bakery, you could able to see a trademark in that is the cream villa. It is owned by the Varun Beverages. It has been licensed by Varun Beverages. This is a value addition for the Varun Beverages company to grab the market share in the dairy based segment. It is going to add to their revenues also. It is one of the very important thing. So this is all the products which the company is having. So next, let us look at on the story of the company. So coming to the story of the company. So the company is a part of RJ Corporation Group. It is a well diversified business in conglomerate with the interest based on the beverages, quick service restaurants, and it is also a second largest franchisee owner of carbonated soft drinks out of USA. So with the trademark of PepsiCo. So this one very notable point. So the company has incorporated in the year of 1995 in New Delhi. So in the 1996, they have started a first production unit in Jaipur. In 1999, the company also started a operations in the Jodhpur, Alwar and Kosi. In 2015, through the business transfer agreement, the Varun Beverages acquired an India business of PepsiCo manufacturing, sales and distribution and the advertisementing and bottling. These are all the areas which they have acquired. So in the next years and all, they simultaneously acquired the other states. Presently, they are operating at 27 states and 7 union territories. So this is what the level what they are now. So as of 2018, so they have 20 manufacturing unit in India and 5 manufacturing unit internationally. Nepal, Sri Lanka, Morocco, Zimbabwe and Zimbabwe. These are all the countries which have one manufacturing unit. So these are all the manufacturing unit which they have as of 2018. So the company is also having backward integrated system where the bottles is been used and thrown, which will be taken back and which will be reprocessed, because of the wastage of the plastic should not happen. So they will going to recycle it and they will going to produce a different products by the outcome of it. Then they will going to consume almost 60% of the recycling. In 2016 October, the company came up with an IPO with an issue price of 445 rupees. So after that, the company share has significantly jumped. So now the current trading price is 991 rupees. So this is all about the story of a company. So next, let us look at on the shareholding pattern of the company. So when it comes to the shareholding pattern of the company, the promoter is holding 66.40%. So compared to last year, the promoters have decreased their stake by 7.16%. So the FIS is holding 20.28% in the company. So compared to the last year, the FIS have been increased 6.77% in the company. The DIS is holding 5.90%. So compared to the previous year, the DIS have decreased their stake by 0.52%. Next, public is holding 7.42%. So remain as usual. Even the decrease and increase of the DIS, that would make a slight increase and decrease in the public's shareholding. So that is going to happen. So in India, the public is not going to control the stock market. Even the institutions and domestic institution and FII institutions is going to controlling the stock market. So if public is not having that kind of a capacity to turn the market. So this is the reason the public shareholding will not want to be impacted. So by the public perspective, it's going to be impacted by the FIIs and the DIIs perspective. Keep it in mind. So this is all about the shareholding patterns. Next, let us discuss on the financials of the company. So I want to give you a note of this financial statement. So this financial statement is from January to December. So the company of Varun Beverages is following this pattern from January to December. So as usual in Indian companies is going to follow April to March, but Varun Beverages is following from January to December. Why? Because the Pepsi company is in the US based company in US. So the financial statement will be almost in the range of January to December. They will going to follow that pattern. So because of that, Varun Beverages is also following this pattern. So when you come to the financial analysis, first I would like to take you to the quarterly analysis statement. As I have explained you in the business part itself, this business it's not stable. So where that is reflecting in the quarterly analysis statement, where you can find this is the March statement, where you can see March 2021 result has been declared. So compared to the previous year, it has been increasing. That's one of the very good point. But if you compare that with the December 2020, where you could see a huge difference, almost 1000 crores revenue difference you could able to see, and also you could able to see a negative EPS, negative earning per share, with a positive earning per share of 4.48 rupees. So this one you should keep it in mind when you are analyzing a quarter on quarter result analysis of Varun Beverages. So it is a well good, it's a huge sales is going to happen in the June quarter because of the last year, the lockdown and all. So the sales was not went up hugely. So still they have sustained that 1640 crores. So in this June quarters, again the COVID lockdown of 1 month is there in the most of the restricted in other states and India. So that's going to impact maybe in the revenues of the company, but it's not huge when you compare to the previous year of June 2020. So this is all about the quarterly analysis. So next let us look at on the financials of annual analysis. So since from December 2012, so the company sales year on year it is increasing, which is one of the very positive thing. So next the expenses is also increasing. So at the rate more than the sales of the company, which you should keep it in mind. So the operating margin, so when you compare to the December 2017, the operating margin has been dropped in the December 2020. Next, coming to the interest which the company is paying. So in the interest also, the company interest is significantly increasing because the loan which they are taking is going to be high because of the working capital requirement. They want to set up a manufacturing unit. Because of that, there is a working capital requirement will be there. There is a capex expansion, capital expenditure will be there. Because of that, they have to take a loan, they have to repay it with the interest. Because of that, the interest is gone up. So after that, from the 2017 year onwards, they have decreased. In the 2019 they have increased, but in as of trailing 12 months, so still the company interest is paying less, so might be the borrowings have gone down. So next let us look at on the profit after tax. So the profit after tax is seeing an improvement from 2017 onwards. Almost they are declaring very good profit after tax year on year. So in the December 2020, so because of the lockdown, their profitability has been impacted, their earnings per share has been impacted. So in the coming years, we can expect a good result is going to become as soon as the COVID play is going to go out. Next, let us look at on the balance sheet. So in the balance sheet, I would like to take you only to the borrowings of the company. So since from December 2012, the borrowings is continuously increasing through to 3,417 crores. So in December 2020, in the last financial years, their borrowings have been decreased. That is one of the very positive thing in the near term, but it's still having almost 3,200 crores, which you should keep it in mind when analyzing this kind of a companies. So when you look at the financial statement looks good. So year on year, so when you compare to the quarter on quarter, it's not good. The company's sales is not stable. So other than that, company is been growing year on year, where in the next coming years also we could able to see a good growth in this kind of a companies because it's in the consumer space. So this is all about the financial statement. Next, let us look at on the financial ratios of the company. So the company stock price is trading at 991 rupees. It is trading at a PE of 71, which you should keep it in mind. So the average PE of this company is 53.8. So why this is concern is that, so because of the earning per share drop which you see in the June quarter. So as every year June quarter will be the highest sale because of the last year corona lockdown. So the earning per share has dropped, but the investor has not lost faith on this company because in the next quarters, in next year and all, they are going to pick up the sales. Because of that, they are giving a higher PE for this company, which that you should keep it in mind. Next, the debt to equity is at 0.91, and the debt which they are having in their book as of December 2020 is 3,216. So compared to the last year of 2019, the debt has been decreased, but it is in an increasing space. Keep it in note. Next, the return on equity is 11.2%. Next is the return on capital employed is 10.7%, which is low. Next, the operating margin is 19%. So the interest coverage ratio is 3.18. So in interest coverage ratios, the company, if the company is having more than 6, 7, it is a very good interest coverage ratio. So when with respect to the Varun Beverages, it's still a concern. So this is all about the financial ratios of the company. So one negative thing which I found about the financial ratios is that, so the interest coverage ratio, so the debt to equity part, so how the company is going to handle the debt in the next coming years. Will they going to decrease that debt? So in the next coming years, in the COVID uncertainty, so in the sales are not good, so how they will going to repay that debt? So that interest which will be paying for the debt which they are having in their book is going to be remain stable even if the sales is going low. With this one, we should keep it in note when you are analyzing high debt companies. So these are the two negative things. So nothing much negative about this company. So still it's a growing business. We have to be seeing a growing business to capture in our portfolio. At least a small amount of the portfolio should be allocated to this kind of companies, which I prefer personally. So I don't recommend to anybody to invest in this. So it's a still world because of the bonus things, bonus play is going to play. Because of that, there are a lot of retailers is going to push this stock price to higher. In the when you compare to the current stock price, it may go higher, but don't be in a hurry to chase that rally. Please be patient and look at the correct time to enter. So finally, the company is very good. It's a growing business. So final recommendation is that it's a very good company for a portfolio. In the next videos and all, I'll be coming up with the fundamental analysis of a new topic, new announcement, and about the stock market. So till next videos, bye bye.